A lot of people ask me, Nick, I want to see your system in action. Well, I trade live literally every single day for free, and I have been doing that in my free Telegram channel, which is the first link in the description for the past 5 years. But I'm going to show you here in the back testing mode just so you can kind of see it firsthand play out over and over. So let's go ahead and just click the little share screen option here. And we're going to go, let's go pick a random pair here. Let's pick like Euro CHF, Euro GBP. Let's pick Euro GBP. This one should be fun. And we're going to scroll back to somewhere random on the chart, hit replay, and then we'll see what happens here. This is 2004. This is some sketchy price action. Let's pick something else. Candles look kind of weird. New Zealand dollar CAD, and we'll go back a little ways. I'll click replay. Do these candles look? Yeah, these candles look normal. Okay, sweet. When was this? 2015. Fair enough. This is before I even started trading. A year before I got into trading. So I'm going to show you guys just step by step everything that I would do, and you can just literally watch it. Again, you can follow this live for free in my free Telegram channel. I share all my daily analysis and trades in there. I share all my exact specifics to paid members in my groups, but you don't even have to pay me a penny. You don't have to buy any courses from me to learn how this works. You can literally learn it all here on my YouTube channel and in my free Telegram channel, the first link in the description. But don't click it yet. Wait, so that way you understand how it works first. So for my system, it's very simple. Price comes to support resistance, and price just goes up or down. All I use is support and resistance. When price gets to a resistance, I sell. When price gets to a support, I buy. If price breaks a support, I hedge. I wait for price to move to the next zone. Then I'll close the hedge order in profit, and then I'll add a buy to that. And then if price bounces up, I make a net profit on the basket of trades. Profit on the sell going down, and then I usually break even on both the buys. If I'm going too fast for you or you don't understand this, watch the other videos on my channel, or just for fuck's sake, just Google what hedging is in forex. Just where you enter an equal and opposite position size. What I'll also do is adding in drawdown. I call that dollar cost averaging. There's different ways you can do that because you can also do it in profit. When I say dollar cost averaging, I mean adding in drawdown. That is what I mean by using that term. So with using hedging and dollar cost averaging, it doesn't even matter if I'm right half the time because I am only right 50% of the time. What matters is my risk structure and the way I manage trades. I'm going to literally show it to you all here in this video. So let's draw some basic support resistance zones. Look, you barely have to do any work when it comes to this. You can just kind of glance at the chart and just draw zones wherever you think price is going to bounce. And it doesn't even really matter if you get it right. It's kind of stupid. Like you barely have to do anything. So, all right. So I've drawn some support resistance zones. This one's kind of weird because price went through it a couple times. This one's a little bit better. This one down here is great. So we're just going to see what happens. So let's say right here, you think that price is going to bounce. And we're going to let's start a 50K account. We'll just use like a $50,000 account and then we'll start there. So we think price is going to bounce our support. So we're going to buy it. How do we structure the risk? What I use is something called invalidations. And I'll space them really far out on the chart. That way it gives me a lot of room to manage trades if they go wrong. So in this case, an invalidation zone would be the location where the original trading idea is no longer valid. And the way that I use them is just to select the lot size. That is all I use them for. So in this case, I'm going to put it right here. I normally put it under the second zone. So here's what will happen. If price bounces up to here, then I'll just simply close this in profit. That's all I'll do. I'll close it in profit. That'll happen half the time. The other half the time, it'll break, go to the next zone, invalidate, and all this shit. Then you have to manage it. And here's how I'll manage it. I'll literally show you everything. So I've entered this trade. We're going to see if it bounces, and if it bounces, cool. And if not, it'll go down here. If price moves from where the entry's at now down to here, that will be a $5,000 loss. And I will use a position size that I've selected that's appropriate. So whatever the hell this is in pips, right? 230 pips. I'll put it in a position size calculator and I'll calculate the lot size so that if price moves from here down to this next zone, below the next zone, it'll be in a $5,000 loss. That's about 10% per trade, per entry, per invalidation on this account, which is about what I'll do, like 2.5 to 5%. So not quite this much, but just to get things moving a little bit quicker for the sake of the example, I'll just show you here in this video. So let's see what happens. So price pulls to the next zone. So here's what I'll do. I won't hedge here, but I'll dollar cost average it. And I'll add a position here at the same lot size. So now what we've done is we've essentially increased the risk. The invalidation for that second position will be, if we use the same lot size, if price moves all the way down here, essentially 230 pips against the entry, So yeah, somewhere about right there. That'll be another $5,000 of risk. But if price bounces up, we can calculate how much profit it'll be, after it's all said and done. So we're going to see if price moves up. Since price didn't really pause right there, I'm just going to take that zone out and we'll see if it can bounce up here to this next zone. And if not, if it breaks below, then we'll hedge both positions. So price bounces up to the first entry, then it comes right back. Looks like it's going to break the support. Okay, never mind. So it's going up into profit. Again, you never know which way it's going to go. So it does get, in fact, to the next zone. I thought this was going to break below. We'd have to hedge, but in this case, it worked out. Like I said, 50% of the time it does, and you don't have to do anything. The other 50% of the time it breaks the zone, you have to hedge, wait for the next zone, roll out of the hedge, and then manage the loser. It's like just the same boring stuff over and over. Again, I have many other videos like this on my YouTube channel. Don't click away from this video just yet. Watch, because I'm going to show you how you manage trades that lose. So in this case, this was a profit. Now, if this original entry was 230 pips of risk down here to the invalidation, 230 pips of profit will be 5,000 bucks, right? Well, this was not 230 pips of profit. This was about 110 maybe. So it's about half of that, 110, 115. So we'll say half of that. So that first trade profited 2,500 if we risked 5,000. The second entry down here, 230 pip invalidation for a $5,000 risk, and it moved up 250 pips, so a little over $5,000 profit. Let's just say it was only 5,000. So we'll add 5,000 plus the 2,500. That's 7,500. So plus 7,500. The account is now up to 57,500. And normally what I'll do is I'll start a 50K account and I'll grow it to 100K. I've done this 6 times in a row, and I'm currently on my 7th account that I'm doing this with. That account is still kind of floating around where I started it like 2 weeks ago. But, it is what it is. When I finally get the winning streak, I'll get to the growth target very quickly. Normally it takes me like a month or 2 or 3. It just kind of depends on the market conditions. But I'll generally grow an account from 50K to 100K, withdraw 50K again, internal transfer a new balance, and just start over and over and over and over and over. And I've shown this live every single trade for the past year in what's called the Mission FX Close Friends group, which is like my paid Discord server where I literally call all my trades out live. Again, you can see this account right here still floating around the 50K balance. So we'll see what happens. Might take a little while, but I always get to the growth target, and I have every single time since I started. So we're out of these trades. These are good. Now, since we think price is likely to bounce here at this resistance zone, we can enter a new trade here. We'll put an invalidation above this next high right here because price could bounce right there, and we don't want to get stopped out or invalidated if it just goes to that next zone, because we can just add and draw down there if we're wrong. So when price came up to this zone and we closed the buys and profit, we could enter a sell right after that. Let's just say we got a little bit shittier of an entry and it's like down here or whatever. Then what we can do is, if price moves up deeper into this zone, we can simply add another sell. And then if price moves all the way up here to this next zone, we can add another sell. What I'll also do is, if it does break this zone here, I'm just going to hedge and I'll enter a buy. That way, if it keeps going up, it protects the loss. So we're going to see what happens if it moves deeper into the zone. We'll add. So perfect. So it moves deeper into the zone. And then just like I told you guys before this even happened, I said we could add if it comes deeper into the zone. So let's say we got an entry like right there. So this will be the same invalidation, right? So that would be like essentially saying if price is, I'll copy and paste this and move it up just a little bit. If this entry, this is like, 100 units apart, so 100 pips apart, this one's like 100 pips above. So that would be, if price moves there, this will be another $5,000 of risk. People say, oh, you're doubling your risk. I'm like, yeah, but what's your likelihood of it working out? It gets consecutively stronger and stronger each time. It's only 50%, but how many times in a row can you be wrong until it works with a 50% win rate? About 1 out of every 2 times. Every now and then you get a 2-3 trade invalidation streak, but when it finally bounces, you make money, so it doesn't even matter. So this is why my win rate doesn't matter. This is why my risk reward doesn't matter. The only thing that matters is my risk structure. I keep things simple and I control risk. That's literally all I do. After this video, click the first link in the description. Follow my trades and analysis live every day in the free Telegram channel. I put my money where my mouth is, and I have for the past 5 years. So price, let's just say if this was a $5,000 risk, and that was so 500 pip invalidation. If it moves, so it only moved 400 pips. So we don't make 5K on that. We probably make about 4,000 because it didn't really move all the way. This was moved like 80% of the way. Sorry, the second one moved like 80% of the way to 500. So we'll say about 4,000. For this one here, it was like about a 250 pip profit target for like a 500 pip risk. So that's about another 2,500. So we're like making negative risk to reward. But again, it doesn't matter if that's the next zone. So we close here at the next zone. We make a $4,000 profit on that entry, and then a $2,500 profit on the initial entry, essentially. So 2,500 profit, 4,000 profit. That's 6,500 profit. So let's add it. 50. So the account is compounding nicely to 64K. So that's that. So now what we'll do is we'll wait for price to get to the next zone. And we'll do the same thing. We'll sell at resistance or we'll buy at support. So it comes back here into the support zone. So let's buy. So we're going to start a position here. I'd probably buy further up, honestly, because that's where it was bouncing at. And we'll have an invalidation. Let's put it underneath this next zone here. It's going to be really far, so we'll probably get negative risk reward on this. But again, it's not the win rate that matters. It's not the risk reward ratio. All that matters is the structure for controlling the risk. Technical analysis doesn't even predict where the market will go. Technical analysis has no predictive power at all. The only useful part about technical analysis and support resistance is the fact that it is a very nice, simple way of controlling risk. That's the only reason it works. If you're using technical analysis to try to predict where the market's going to go, you're going to be very, very, very extremely fucking frustrated. So don't do it. Just use it as a way of controlling risk. Whether you're using stop losses or whether you're like me, you're using hedging, dollar cost averaging. I like hedging and dollar cost averaging because I just roll out of 95% of trades in a big profit, small profit, break even, or tiny loss, which I call break even. Very few of my trades become a big loss. That's like 5% or less. Statistically, objectively, looking at my actual P&L statements and my P&L terminal history on my live accounts that I've shown over and over for the past year of me taking 50K live accounts to 100K over and over and over and over and over. It's the same shit. 95% of my trades I roll out of in a profit or break even or small loss. So let's see if price will go up here. So if this risk right here, this is a $5,000. Actually, let's do a 6,000. Where's the account at now? The 6,000. Yeah, so we'll do a $6,000 risk because the account's grown a little bit. So there's $6,000 risk. And that means if it comes down here about 500 pips below, it'll be a $6,000 loss. But if it comes up here to this previous high, it'll be a little over like almost a $4,000 profit. So let's see what happens. And if it breaks below, I will hedge right here, meaning I'll enter an equal and opposite sell position. I was hoping this one would get invalidated and hedged, but I'm sorry. The win rate is 50%, so it bounced. So this went into profit. So again, if let's just say 500 pips was the $6,000 risk. This moved a little over 300 pips. Let's just say it was only 300, just to be worst case scenario. So that's about half of what the invalidation. That's more than half actually. So let's do so it'd be 4,000. Let's do $4,000 in profit. That's a fair adjustment. So it'd be $4,000 in profit because it got a little more than halfway to the target. So now the account's at 68,000. So we'll do the next trade. And for this, I mean, it's literally at resistance. It could push a little bit deeper. Let's do the same thing that we did for the original trade, meaning if it bounces here, we'll use an invalidation all the way up there. So about 470 pips, let's just make it 500 to round it off. And since we're at almost $70,000, let's just do a $7,000 risk. We're compounding the account up. We're growing it. Let's do a $7,000 risk. What I will do, if price pushes deeper up into this area, I will add again right here at that previous high. And then I will hedge if it breaks the zone up to this zone, and I'll add another sell right there. And hopefully it happens. That way you can see what happens if like a bad trade occurs. So it goes up to the zone, do exactly what I said, hedge right there. Sorry, dollar cost average right there. A new invalidation for that second entry is going to be the same distance above. So if this is like 84 pips, this will 84 pips between the invalidations. These are both $7,000 risks. So let's see if it bounces. So it does not bounce. So I'm going to hedge both positions right here on a break of that high. And this is the daily chart. So you have like a whole day to look at. You only have to look at charts once a day. Barely takes any time. If you're bitching because like you have a job or you have a family, you have kids, a bunch of obligations. If you trade daily charts, you literally look at the chart one time per day. That's all you need. I would personally do it like 2 or 3 times a day just to see. But how the daily candle closes is all that really matters. And if you just look at it on the daily, that's all you need to do. So I'm hedged right here. Now, so we're hedged at a pretty big loss here, right? We're hedged at halfway to the inval on both of these. Maybe like a $5,000 loss or so. Because based on these invalidations and how much risk there is, we're at about a $5,000 loss. So price is going to do one of two things, right? It's not rocket science. Price is going to either go down to this support again, then maybe bounce, or it's going to go up to this resistance and then maybe bounce. Let's see what happens. Hopefully it completely screws up. That way I can show you guys how I roll out of a really bad trade. And if it doesn't, it doesn't. Like I said, most of the time, like it ends up in a profit. So it just bounces somewhere. It's not going to keep running in one direction forever. So it almost gets to this resistance, but I cannot say I would have done anything because I didn't go far enough. Instead, price came back down here into this support. So what I do in this case is I just close both of the sell positions whenever price comes back into the support. So let's say we got an average price. That one was a small loss. This one was a small profit. And we close there. In this case, since we're already in 2 buys, I would not add another buy. And these buys, the invalidation, since the sells were about, it's like 400 pips, 500. So we'll do 450 pips. If both of these move 450 pips down here, that would be a net drawdown of $7,000 risk each, which will be $14,000 if it moves all the way down there. We're going to manage it before then if it breaks the zone, but that's just how the risk structure would be. And if it bounces, cool. It'll go up to the next zone and make a little bit of a profit. So it goes a little bit deeper into the zone. Since it's deeper into the zone, I'm going to add a position right there. So this is taking on a lot of risk, but again, the risk reward and the win rate does not matter. It's the likelihood of the outcome playing out. If you still think it's going to come into a support zone and then bounce and go up, you shouldn't be closing the trade at a loss or hedging. You should be adding to the losing trade. Yes, it incurs more risk, but it doesn't matter because if the outcome of it playing out is most of the time, cool. So far, we entered a trade here. We were wrong one time. Okay, cool. Price is coming to this zone, and then it's on the second try. We're trying to get this to bounce right here. And if we're wrong, we'll be wrong a second time. So in this case, price goes up. Let's wait for it to come to the next zone before we do anything, at least to the previous high. Then I'll say we can close it. Okay, so it did come to the previous high. So now, in this case, we were wrong one time, but thank goodness for a 50% win rate because the price will bounce roughly 1 out of every 2 trades. That's it. So it didn't bounce here at resistance the first time. So price rocketed against us. We hedged to protect the risk or whatever. Came back down, then bounced. So let's calculate if all these are the same position sizes, how much the profit would have been. If each of these sells here was a $7,000 risk with about, let's say, a 500 pip invalidation, that means that these buys right here would have gone into drawdown, right? So both of those at one point would have been in halfway to the drawdown. So essentially like a 3,500 each or about a $7,000 total loss right there. Then we closed those at break even, added another buy, and then it went on, et cetera, et cetera. So if this was a 500 pip inval, for this buy right here, a 500 pip invalidation would have been all the way down here for a $7,000 risk. But instead, price rocketed up into profit about 355 pips. So let's just say it was like 300, right? Let's just round it down to be worst case scenario. That would be 60% of 7,000, which let's just say 4,000. So that would be $4,000 profit. So let's factor that in. So plus $4,000. Then we also got to factor in the tiny little profits we would have made on these 2 trades. So these 2 trades here, each a $7,000 risk if price would have moved 500 pips. So these ones moved about 124 pips. So let's just round it down to 100 pips. So that's 1/5 of 7,000, which we'll say 1,200. And since we had 2 positions, it's 1,200 times 2. So about $2,400 profit. So not much profit, right? It was down like a lot, but like $2,400, decent, right? You could buy yourself a couple Chipotle burritos. So we'll do plus 2,400. So get this. Even though we were completely wrong about the sell, then price came back into the zone, we closed the sell, added a buy, and that one buy was right. Instead of this being 2 losses or hedges or a bunch of crazy stuff, this ended up being a net, what was it, like a $5,000, $6,000, $7,000 profit? So yeah, 68 to 74, like a $6,000 profit. Not too bad for just being wrong, right? So instead of a loss or a break even, it's actually a profit. The account's at 75K. Let's take another trade. So we'll do the same thing, and let's go ahead and just clear all these drawings just to restart the chart again. We've got a support resistance zone right here, big zone. So we can start a position right here for a sell. Then what we can do if price pushes deeper into the zone, we can add another sell up here. For the invalidation, the next clear zone are these daily highs up here. I don't really see much else for now, so we'll have to figure out how we're going to manage this if it doesn't work. So we'll see. We'll play it, as it happens. For now, I'm going to set an invalidation way up here for the first position. So that's all we got so far. And if it bounces, maybe I'll close there at the previous low. So we're going to let it go. So it rockets up above. So as it got somewhere above the support resistance zone, I would have added a sell right here. And then as it continued going against me, I would have hedged. So I would have hedged right here. And the risk would have been 7,500 per trade. So because it's about 10% is 7,500. So these are hedged at a pretty big loss right now. So that right there is 320 pips of invalidation. The second one, the invalidation would be the same thing, like 320 pips, so a little bit further up. So we'll do Control V, and that's about the same thing. So, and then we've got these hedges up here, which are now in profit. So now what do? We get hedged. Everything failed. What do? You just simply wait for price to either move down to the next support, then you can take the bounce there, or you wait for price to move up to the next resistance, then you take the bounce there. And what do I mean take the bounce? If the price moves to this resistance, just close the buys and profit, add a sell. If price moves down to this next support, close the sells at break even, leave the buys. That's literally it. You just get net long or short at the next. So you just try again. Whenever you're hedged, it's no big deal because you're not actually taking the damn loss. You're just defaulting on the loss until price gets to the next zone. Then you're managing it. And as long as you have at least a 50% win rate and you're not using crazy position size and you're structuring your risks just like I'm showing here in this video, you're usually never going to be in a huge pickle, even if you're wrong multiple times in a row. So let's let price just move up or down. We'll see what happens. So price does in fact move to this next resistance zone. So what I'm going to do here is close both of those buys in profit. We will calculate the final P&L at the conclusion of the basket of trades. And what I'm going to do is I'm going to add a sell right here. Then on top of that, I'm going to add another sell if it moves above this zone. Sorry, if it moves deeper into this zone. Okay, so it didn't really move deep enough into the zone where I would have added a sell. I would have added a sell at this big just resistance right there, just to be safe since I'm already in real deep. But at least this one. So we'll wait for it to come down a little bit more before doing anything. So it does come down more, essentially almost to the previous zone. So let's go ahead and manage it right here. This is probably where I'd probably just be thankful I even got to move down at all. So let's figure out what happened. If that original risk for that position size was 300 pips, that means that every position, 300 pips in profit or loss is going to represent, we can calculate how much profit would have made. So for this, and that was 324. So this was 300 pips in profit, and this was about 320 pips in profit. So we're going to say each of those was about a $7,500 profit. Since this initial risk here was about 300 pips or so, between 300 and 320, 300 pips of profit means that we would have made 7,500. So on each of those, it would have been $7,500 drawdown. Then we would have had this big drawdown like floating at the time. So, all right, so 7,500 plus 7,500, let's add it. What is that? 15K? So we'll just do 15,000. So 15,000. Then we also have to factor in these sells. So this sell position here moved, let's say 362 pips in profit. So about a 1-to-1, a little bit more. So instead of 7,500, it was probably a little bit more, probably closer to 9,000 because it went a little bit past like the, 360 or whatever, right? 350, so a little bit past it. So we'll say instead of 7,500, it would have been about a $9,000 profit because it's a little bit more than what we risked. So plus 9,000. So we made 9,000 on that one. No, we also have to factor in the little losses here. So if 320 pips of risk is $7,000 worth of loss. Then this moved about halfway to that invalidation. So it's about half of the loss. So we'll say it's about 3,000. And let's just be worst case scenario, round it up to 3,500. We also have this one here, which that invalidation was about 300 pips. So it moved how much into loss? About 67 pips. So instead of 75, let's say that's about 1,000. We'll say $1,500 loss. So a $3,500 and $1,500 loss. It probably wasn't even that much, but let's just say it was that much. We'll just say it's minus 5K, which that is not minus 5K. That is not that much, but we'll just say it's that much just for the sake of the example. So we'll subtract $5,000. Even though we were completely wrong, we've still grown the account another like 5-6 grand. That's why I love hedging and dollar cost averaging. We'll do one more. We'll get the account to the growth target, and then we'll recap, and then we're finished with the video, and you can go try this yourself on a demo account this week. Trading's risky. You're probably going to lose money doing this. I'm just some bald guy who trades. Don't listen to anything I say. Just a video. So price comes down here. I'm going to buy, and we'll select the invalidation and everything. If that happens, let's let it get down there. All right. So it comes down here. I would buy. The next clear zone that I can see is these lows right here. So let's place the invalidation a little bit past that. So it's a big invalidation, but it gives us plenty of room to manage if this is wrong. And since the account is so damn close to the growth target, let's risk $9,000 on this trade. It's about a little bit under 10%. So $9,000 of risk for a 550 pip inval. If it could get somewhere close to the highs, this will be closed in the profit target. So it may not work. It may hedge. So let's wait. Ooh, not looking good. So it comes back to the support and it breaks. So let's hedge right here. And then what do we do when we're hedged? What do we do? Very simple, right? Wait for it to come to the next zone. It'll come to the next support, or it'll push back up and go to the resistance. In either one, we can manage the trade. So let's just see which one it'll go to, because you don't know, because it's 50-50. It just goes up and down. Don't overthink it. So it comes up to this next zone. So we can close that buy there at break even. And we can add a sell. With the new invalidation for both of these, we can hedge if it breaks above this zone. Then we can try to take her to the previous highs if she goes that high. So let's see what happens. Goes into profit. Let's see if it can go down to the next zone. So it goes pretty much close to the next zone. Right there, after that daily candle closure and these two sideways candles, I'm probably just it'll go to the next zone most likely, but I'm more likely to just close right here because it was a good trade and the move essentially played out. So how much profit? And what was the outcome? This buy was a break even though it was wrong. That's why I don't like closing at stop losses. I like waiting for prices because not only if you're right, does the other trade profit, but you also have the initial trade usually end up at a break even or small loss. It's like exponentially better. That's just my opinion. So if this was let's just say a 550 pip invalidation, that means every 500 pips or so is about $9,000 of profit. So let's see how much this would have been. Price moves from, so this first entry down to here is about 250 pips, about halfway. So that's about 4,500. And this right here is about 300 pips. So that'll be about 6,500. So 6,500 plus 4,500. Let's just say that's 6,000. So sorry. So 6,000 plus 4,500. So that's like 10,500. So we'll add this in, 10,500. So the account's now to $103,900. So a 50K account showing you step by step how I would grow it to over 100K in this case. Normally I get to 100K, then I just pause and I withdraw, start over again. But that is it. That it's just buying at support resistance levels, using hedging and dollar cost averaging to control risk, and not risking too much per trade, meaning setting the invalidations a good distance away from wherever you're entering at. I do this over and over again. I teach this whole thing in my compounding course, exactly how I do this. The second link in the description is my website where I teach like exactly like everything. It's all my paid courses. Again, you can figure this out on your own. It might take you a little bit longer. My courses might help speed up the process, but I don't guarantee you anything. I can't, because trading, most people are going to fail at it just because they don't have like the mental fortitude to stay persistent, learn the same thing over and over again, be objective using reasoning and logic and evidence and tracking their trades to see what happens and what works and what doesn't. Most people won't go through all that shit. They're going to try and delve into it and they're going to fail just like everything else in life. A lot of things in life are hard to do. Trading trading is no exception. Most people lose money. Most people fail. This is how I personally do it. This is what personally works for me. I've been trading 7 years, and 5 of those 7 years have been profitable. And pretty much most of the time I've just used support resistance, except for like the first profitable year trading. I was trading a slightly different approach. I use support resistance because it's just so damn simple. It's just really, really hard to fuck it up. So that's it right there. If you want to follow my trades, again, hit the first link in the description. I share my analysis daily on my free Telegram channel. I also have paid products. I've got a close friends group where I literally share all of my trades. People are watching me for the 7th time in a row since the past year. Grow this 50K account up into 100K. In this case, it's GBP now because this broker is a different broker. But with this, it's crazy because even when I get into a drawdown, nobody really freaks out, because if anybody knows how I trade, they know that all my drawdowns, like 95% of them, turn into a profit. And it's the same thing here with this stuff right here. I was hoping to get into a big drawdown and a big loss to show you guys how I'd manage it, but it just doesn't happen most of the time. If you're structuring your risk appropriately, you're using major daily zones, you're adding in at the major zones, you're hedging, dollar cost averaging whenever it goes deeper into the zone, and then if it breaks the zone, you hedge, wait for the next zone. As long as you're patient, you're waiting and letting everything play out, it works almost every single time. And like I said, I don't say this, I'm not talking out my ass here. I literally do this live, and I have been trading live for the past 5 years in my free Telegram channel. Then I started my paid Discord where I share everything, live. People can get on the group chat and ask me questions any time of the day and everything. I started doing this like a year ago, and I've done it live every single month. We've had, I think, like only a couple break-even losing weeks in the past year. 10 months. I've been doing it about 10 months. In the past 10 months, we've only had a couple break-even losing weeks. Every single thing else has been profitable over and over and over, back to back to back most of the time. It's been wild. If you want to watch me do it live, just click the first link in the description. It's free Telegram channel. If you want to learn more in depth exactly how I trade, check out my compounding course, and also check out my close friends group, because that's where compounding course, you learn everything. You learn exactly how I compound accounts over and over, doing this exact same thing, just with a lot more details. And it comes with a one-on-one session with me for you to ask me questions or whatever. And then also you get lifetime access to the live group Q&A sessions that we do on Zoom. Really fun. We all get to hop on Zoom, hang out. I do them almost every single morning right now during the weekdays. And then if you want to follow them live, join the close friends group. It's like you can follow all the exact trades I take, literally every update, how I manage the hedges, how I manage the position sizing, risk structure, all that's in the close friends group. All that shit you can find at the second link in the description of this video. It's just my website, missionfxtrading.com. Cool. Hope to see you in the free Telegram channel. Hope you enjoyed this video. You don't have to like or subscribe. You do whatever the fuck you feel like doing. I just make these videos because I wish I had known all this stuff back when I was just a young lad. It would have helped speed up my process. Probably wouldn't have taken me 2 years. It probably would have taken me a couple months had I knew all this stuff back when I started. So I hope that it really helps you. Cheers.